Okay, hello guys, welcome back again to my YouTube channel. This is Pips YouTube channel, and my name is Joseph. Yes, I'm so glad to be doing this video. You see what I have to for you guys today? Yes, actually I have another video on mm, mm, level count, and what happened is that I have a lot of people telling me to actually to redo the video on level count that is not too clear, and I agree with them because the video was so short, not that just so short, but I think there are some things that I omitted, which I needed to include in this video. So that being said, if you know you've not yet, you are new to my YouTube channel, I welcome you, but don't just watch. Kindly subscribe to this YouTube channel and turn on the notification bell so you can get notified each time I upload new content. And not only that, if you know you love this video, kindly watch the end so that you can know if either you can like this video and then share to your loved ones or your friends that are having trouble in trading the the in trading generally, like in the Btmm way. So today we're looking at market structure in depthly. So journey with me as I take you on market. I mean on market on level counts rather level counts. So we're looking at level counts. So now let's let's go. So before we look at this chart, I want to do some things. Let's assume the market is giving us something like this, a range market, okay? We're having a move up, okay? A move down, a move up, a move down, a move down, and a move up. So you can see this market is consolidating right now. Then all of a sudden we have something like this. One, two, one, just one, then two, then we have something like this. One, we have something like this. Then the market moves up in this right direction, coming back here, moves up again, come back here again, moves up, the market gives us something like this again, then moves down, touches this zone, comes back, then moves up again, then push down for the last time. Then we have something like this. I hope you're with me. We have something like this. Okay. Then we have something like this. So guys, this is a typical market structure. Or let me just say this is a typical Btmm market structure. Okay, first we have the Hessian range. Asian range. Then we have the stop on phase. Stop ons. Okay. Then you have the pattern. Pardon me. We have the pattern. Okay. The pattern. Okay. Then we have our what else again? 3 levels of rise for the real intention. 3 levels rise, right? Then you have the New York reversal pattern. You have New York reversal pattern. We have New York 3 levels of drop. Then we have consolidation phase. So this is a typical market maker or a Btmm market maker pattern that ideally you ought to see in the market. So, but because we cannot speak about level counts without talking about the market pattern of Btmm and not just market pattern of Btmm. Also, we want to look at the whole picture of the price currently. So now you would agree with me that this is a 3 level of rise, right? These 3 levels of rise can be, okay, I want you to understand is that the 3 levels of rise can be intraday, intra-week, intra-month, and intra-year. I hope I'm not confusing somebody here. At least the 3 levels of rise can be intra-day, intra-week, intra-month, and intra-year. So depending on the kind of trader you are, okay, if you are a day trader, once you see this level rise, this consolidation over here, okay, once you begin to see this consolidation over here, this consolidation moving from here to here, then you see a movement, okay, from here to here, this Asian range, then you see a stomp on face, 2 levels of drop, 1, 2, okay. Like I told you that the Asian range it's from the high stick concept is 2 standard deviation of the Asian, I mean the stop ons, they are always 2 standard deviation of the Asian range. Why did I usually go for ICT ICT standard ICT method of stop ons? It's because ICT method of stop ons, I see more sense in it. Why I'm not saying that Steve Morrow's stop ons phase is not There's no sense making in it. But personally, to me, I see more sense in ICT um, um, Asian stop on. Why? Because in ICT will tell you that okay, the Asian range is two standard deviation of, I mean, the stop on phase should be two standard deviation of the Asian range. That is, it should be two times the Asian range. That is, from here, we calculate it from this level, this Asian range, which is the initial high of the day, then to this level, which is the initial low of the day. So twice of this Asian range is should be your stop on. I get what I'm saying? But Simuro or Btmm will tell you that your stop on should be a maximum of 50 pips. And then you would want to pause and ask yourself, if the market has given you 50 pips as a stop on, has the market not make a good move for the day? As a matter of fact, Steve Murray will tell you target 50 pips in a day. And if stop on gives us 50 pips, isn't that a target of what he even advised us to target in a day? So you can see that personally, I see a flaw in the theory of maximum of 50 pips for stop on. No, I don't buy that idea. Because if a stop on phase should give me a 50 pips stop on phase, it is no longer a stop on. It's already a movement to me. It's a trend to me. You get what I'm saying? So that's why I go for that of the ICT concept of having two standard deviation of the Asian range. Okay. So that being said, now the three levels of rise can be intraday, intra-week, intra-month, and intra-year. Now, what I mean is that, let me explain myself. Let's assume now you are a day trader, right? This is a period separator. Okay. This is a period separator. Now, you're entering the market. The market is giving you, let's say, an Asian range, then a stop on phase, then you have a pattern. Okay. Then you want to see 1, 2, 3. Then the New York session times coming, you want to see 1, 2, then 3 before you then consolidate. Now, all the three levels of rise for, I mean, the three levels of drop would be within the daily, I mean, within the day. That is, you want to count your levels within the day, and the three levels of rise for the New York session 2 is going to be within the day. Are you getting what I'm saying now? So it can be within the day. If you're a day trader, it's going to happen in one day. I get what I'm saying. If you're a day trader, it's going to happen within a day. Okay, it's the three levels of rise. I mean, of rise or drop, depending on where the stop on phase occurs. That means it's going to happen within a day. I get what I'm saying now. It's going to happen within a day. So just this day. So I can see that it happened just within a day. Okay, but if you're a swing trader, now let me just release for day traders. Okay. Now, if you're a swing trader, okay, this is what you want to do. Okay, 1. Then let's assume this is a full, I mean, a swing trader. Let's assume this is a weekly, this thing, a weekly time frame. Okay, so you would want to see that happening in a weekly time frame. That is the drop. Okay, the drop. Let's assume you have a consolidation, then a stop onto the low, then we have the pattern 1, 2, then 3. Then we have the New York reversal 1, 2, 3. Then the consolidation again. Now, all this is a weekly bias for, I mean, for a swing trader. I know what I'm saying. This is a weekly interval. That is, you want all this to happen in a what? In a weekly time frame. And what kind of time frame are weekly time frame? You want to look at your H4 is a weekly time frame. Okay, so all this must happen in intra-week. Okay, so you give one having that like that for intra-month and for intra-year. Okay, and that is in intra-year, that is you're looking out for a 3 levels of drop for the space of within the space of 3 years. That is, the market is going to move down. Probably if it's going to move down, or if it's going to go up, it's going to be a 3 levels of drop for 1 year. For 1 year, then next year, and that drop, then third year, and that drop. Then we cannot have a reversal pattern. Okay. Why for the weekly time frame? Then you want to see it happening in intra-week. That is 1 week drop, 2 week drop, 3 week drop. You know what I'm saying? Now in intra-month, you want to see something like 1 week, 1 month drop, 2 month drop, 3 month drop. For day trader, just within 1 day, that is when you want all these to take place. Again, I'm saying just within 1 day, that's when you want every of the 3 levels of rise or drop to take place. Okay. Now that being said, let us now there's this thing that I would want you to notice in the market. Sometimes you're going to have something like this. Okay, you have a pattern here, right? A peak formation, high, then you have drop 1, drop 2, drop 3. Okay, then ideally you're expecting that, okay, at this point the market should reverse. Okay, but this is what I want to tell you here. You see, when you watch the Btmm video taught by Steve Morrow, it's so simple, no doubt, but the market cannot be stereotyped in that way, that you cannot expect the market to always give you that kind of thing and say, oh, this is how it is always. No, because if that was how it is every time, nobody will be losing money, everybody will be making the money. You understand? But it is not as easy as you see it. Okay, sometimes you're going to see this level right here, 3 levels of drop. Then according to Steve Btmm, you want to have your reversal for me, like then having something like this. Then you want to have something like 1, 2. Then what do you want to? You want to have another 3 levels of rise. But sometimes you might just have something like this. Then you move like this. Then you see something like this. Then you see something like this coming down. Okay. So that being said, you would see that the market will just move down, then continue again. 1, 2, 3. Are you getting what I'm saying? Final level of rise. So what's the problem? Yes, the problem is that you would want to differentiate between a peak formation high or low and a peak reset high or low. Are you getting what I'm saying? Now, let me differentiate for you so that you can understand. Where can I write it? Okay, let me put it. To understand the level of the market reversal, you would have to differentiate between the 3 levels. No, which is you have to differentiate between not 3 levels, between a peak formation high and low, and high and low from a peak reset. Okay, so to understand where the market is going to reverse, you want to differentiate between the reversal. What you want to know that the market is going to reverse is if you are in a peak formation, then you expect a levels of drop. But if you are in a peak reset, you should expect a continuation of that same level. Like when you look at this over here, When you look at this over here, you can see that we have a peak formation I here. This is a peak formation high, PFH, peak formation high over here. Then we have a 3 levels of drop, 1, 2, 3. Then this is a peak formation low, right? This is a peak formation low. But after this peak formation low, then we have something like 1 rise, 2nd rise, then we have an M formation forming, then we have another level of 3 levels of drop. Now what happened is that this is a peak formation high. Let me this is a peak formation high. Okay, this is a peak formation low. Okay, so you need to have that in your at the back of your mind. Okay, after identifying the peak formation low, so this is a peak formation reset, PFR. So you want to, this is a reset. Now, ideally, from this concept, from this, okay, yes, ideally from this, from here, from here, this peak formation low, you'll have a 3 levels of rise. But look at here, the market gave us a pattern. So, and if you're so familiar with Btmm, this is how it is. When you have a W formation, that is a W formation for a buy, when you have this W formation, then what you're expecting is that this is what you're expecting. You're expecting the W, then V, then hem. I don't know, you get what I'm saying. That is, look at this. Okay, this is let me give you okay, let's use this for example. This is a W formation, right? This is W formation. Look at it. Now, as we move up, then we have, look at, is this not a V? One V, one, 2 Vs, isn't it? Now, an hem signifying a reversal from this W, okay? Then we have V1, V1, V2, and hem signifying a reversal. Are you know what I'm saying? So this is what the typical pattern of Btmm looks like. And for a buy, you're going to have an M, then, I mean for a sell rather, then inverse V, then inverse V, then a W. Now, when you look at it here, because an hem, this is an hem over here, right? Now, this is an inverse V, inverse V1, then inverse V2. Okay, this level is not complete. Then we have another inverse V3 to move down, then before we have a condition. Okay, that's how it is. So this level, I can say. So this inverse V1, inverse V2 is complete. Then we have a consolidation or a W that's going to signify a market reversal. So, but in as much as you did not, like, once you begin to move, now look at this M formation, then we have inverse V1 over here, right? Then inverse V2, I know what I'm saying? Then we have a reversal, which is a W formation, signifying reversal. So once you see this W formation, then what I'm looking at for is that number one, you want a V1, like you're looking at having like two Vs before a reversal. Now you have a V1. Then once you have a V1, then this is where you have also add your V2. But instead, you now have an M. So the reversal that ought to happen when you have a 3 levels of drop of rise is when you now that are called when you now have a 2 levels of drop, which signifies reversal. That you now have an hem. That is, an hem always signifies a reversal. Okay, and for a W formation. Okay, but look at it should what the market did now was that it cancelled this V2 and place it cancelled this V2, okay, and place this M right over here. So the market then turns to W V M. So if you should have something like this, you should know that it's a reversal because WVM is not a typical BTMM level. I mean BTMM level, it should be WVVM. So, but if you're having something like this, then and if you have something like M inverse V, then a W, uh, then you should know that it's a reversal. So you want to identify between a peak formation low and a peak formation high. So how do you identify a peak formation low? Let me really say that so that we can then look at an example from the chart. Now, peak formation low or high always happens at the end of a BTMM market cycle. It usually signifies a reversal. You know what I'm saying? So what I mean by this, peak formation, low or high, always happens at the end of a BTMM market cycle. Now this is a BTMM market cycle. Asian range, stop on, then we have a W pattern forming, which is then you have 1, 2, 3. Then you have another, then you have a peak formation, New York reversal peak formation. As you can see, it signifies a reversal to this buy. Then you have another levels of right drop 1, 2, then 3. Are you getting what I'm saying? So this is a typical BCMM market cycle. Okay, you want to understand that. Then, so when you see a typical peak formation high or low, then you know that it's signifying a reversal. Okay, why peak formation reset? Peak formation reset always happen either on a 1 or 2 levels of rise or drop, and it usually signifies a continuation. I hope I'm not confusing you now. Now, the peak formation reset always happens either on a 1 or 2 levels of rise or drop, and it usually signifies a continuation. Now, looking at this as an example, let's just find a space to draw this as I can explain. Now, this is a peak formation, right? Let's say this is the peak formation. Let me use a W now. This is a peak formation, right? A peak formation low. Then we have 1, 2, then 3. Okay. Then we now have another peak formation high. Are you get what I'm saying? Then we move down one. So if the market should give me one, and then I have something like a W, then it signifies a continuation of this trend which we began. Okay, so this is what this place means. Or if we can have a, a two levels of drop again, then we should have this kind of pattern for me. You understand? So we can have this, okay, or we should move, then we should start moving again. We can start counting one, two, three, or another three levels of drop, two levels of drop, then one, two, three. I get what I'm saying? So if the market did not complete the cycle of three levels of drop, three levels of rise, then you now become to see an M or a W forming, then it's a peak reset, not that is, it is starting over again. That's what a reset means. Now, when you have a peak formation, that means the market has gone to its formation. That is, if you have a peak formation high, that is, the market has gone to the highest level that it can get to. This is what the when you use your RSI or any oscillator, they will tell you it's the market is at overbought zone. So a peak formation high is like an overbought zone. Okay, so that level, the market has got to its peak. It cannot move beyond that level again. Then you begin to want to see what a peak. Then you want to see a levels, another levels of drop. So if the market is at its peak formation low, that is, the market is at the oversold level. That is, the market is so low that it has gone to its lowest point that it can sold from, that can be sold from. Then you want to have a three levels of rise. You understand? But a peak formation reset simply means that if the market gives you like two levels or one levels of rise or drop, then you now see a M formation or a V formation, I mean an M formation or a W formation. If it's a drop, then you want to see a W formation. You understand? That means the peak formation reset means that the market is at a peak formation, that is, it's giving you a peak pattern that I'm at my peak. You understand? But it is not actually the peak, but because it wants to reset, that is, it wants to start over again. That is that at that level, at that moment, you want to recount that levels. You want to recount the level. Like it has here 1, 2, 3. Then you have a peak formation I, then you have one comes down, then you have a W formation forming over here. I get what I'm saying? Then it's a peak formation reset. That means you have to reset your counting of levels. Then you have to go, because this is a W formation, and a W formation signifies a buy. Then you want to have a three levels of buy again. 1, 2, 3. I hope that is clear on that. So that is just this. Sometimes you might have an head and shoulder or thereabout. So, but that is just for another day. I hope this is clear. So, having said this, let us just go to each chart, because what you need to know usually is about this, and then that's what we've taken care of. So let us just go to the chart, and then let us look at examples of what we just spoke about. Okay, guys, now let's look at this. Let's look at this. Okay. Now we have this. Okay, the market is giving us an information, right? If you can agree with me, the market moves up, then comes back here to grab what? Liquidity. The market moves, we have a push one, then we have two, not three, then we have a kind of M formation. Are you getting what I'm saying? So which means that this is a peak formation reset. So which means that this is a peak formation reset. Okay. This is a peak formation reset, please. PFL. Peak formation resets. Okay. So PFR rather. So what the market do? The market needs to move up higher. Okay. And the market now then moves, then it gives us something like this, then to start moving up. Then we have 1, 2, then we have our three levels of rise. So 3 day, 1 day, this is intraday, 2 day, then the 3 level of rise. Can you see that this is an intraday, this is 1 hour time frame. So that's how a peak formation high or low happens. So I don't want to make this video to be so long, and it's already long, so I don't want it to be longer than this already. So that's how a peak formation like happens. I mean, a peak formation reset, like you want to, this 1 day, this is the one intraday, day one, this is the two, the one level of rise, right? The two levels of rise. Now you have the three level of rise, but look at what it is. Then it gives us the what, and a multi-session. You have your TD high here. You're going to have a kind of a divergence signifying a reversal. Then you have a reversal. Then you have a what, a reset over here, and a W. You can see that even right here it gives you one, then two. Then you want to have a what, a reversal here. Then a, even right here you have a divergence. You have a TD high over here. Then you have the continuation of this trend, a peak formation low, formation of this trend. Then you have something like one, two, then three. Then you have a peak formation high of completing is 3 days of cycle. So I hope that is clear about that. So, guys, so that's it on how to identify market, how to know how to count your levels. So I believe that you are educated on this video. So if you know you like this video, kindly subscribe to this YouTube channel and then like the video, then share. And if you want to get updated on new videos, kindly click on the notification bell so you can get notified each time I upload new content on my YouTube channel. It's like come every next time. Have a great trading day ahead of you, and do not stop practicing. Do not stop learning. Okay, because that is the secret to a successful trader. You might be having some challenges now and down. We all have. We all do. There was nobody that was born a master of this art. That's the fact. We once fell, we once fall, we once falter, but at long run, is what really helped us is that we did not give up. So we kept on practicing, kept on pushing until we were able to be a master of the game. And if you want to be a master of the game, you can only be a master of it if you don't give up, and if you keep on practicing until you perfect the art. And please keep on practicing until you perfect the art. Until I come your way next time, have a great trading day ahead of you. Bye bye.